Hi, good afternoon, everyone. This is Amol Dete from the ETBFSI.com, and we have a special session on the Fintechs today. This session is specifically about what's next in Fintechs. As we all understand, Fintechs is the flavor of the season. Fintechs have revolutionized the whole financial transactions, and in fact, they have strengthened the whole banking system. And that's the output. And the output that we have today is the seamless transactions, whether making a payment or even going for a credit. The documentation and everything is quite seamless because most of the work is done by the fintechs using digital. But the challenge today is, though we have more than 20 unicorn fintechs and more than 100 startups, as a unicorn startups, most of the investors have poured funds into the fintech space. The question today is what next for the fintechs? And the question comes because of various reasons. Even the listed fintech companies also are not profitable. The companies which have raised billions of dollars are and also are unicorns, tagging as a unicorns, are also not profitable. And considering the geopolitical situations, the tensions are really high, and the investors are not pouring in money with the same speed which they had earlier. Considering all this background, the major challenge is whether the fintechs will survive, how will they become profitable, and more importantly, what's next. So we have been doing and covering a lot of fintech stories in our special series called Fintech Diary, but we are doing this special show FinNext, and we'll be doing this at least two episodes every month, and then do a final event specifically on the FinNext in Bangalore in June. In this particular session, we'll try to decode with somebody from an insurance, somebody from a cross-border payments and a blockchain, and more importantly, from an investment side also, and try to decode what's next for the fintechs. So, ladies and gentlemen, let me welcome my speakers and introduce them to you. My first speaker for this particular discussion is Mr. Rajesh Raju, MD Kalari Capital. Rajesh, glad to have you. My next speaker is Mr. Sanjeev Jha, CEO and ED CoverFox Group. Sanjeev, glad to have you. And my next speaker is Prasanna Lohar, the CEO of Blockstack, who has been working in a blockchain and cross-border payment side since really long. Prasanna, glad to have you. So, gentlemen, before I begin, I would also ask the audience if they have any specific questions. They can either they can send the questions on any of the social media platform they're watching, and we'll try our best to take the questions. Please stick to the theme that is FinNext or FinTechs next if you're asking any question. So, so Rajesh, Prasanna, Sanjeev, my one and only, the first common question to all of you is what is happening with the fintechs right now? Before we speak about what's next, let's discuss today's situation. What's brewing with the fintechs today? And Rajesh, I would like you to start first.
Thanks, Amol. Glad to be here this afternoon, and welcome everyone. Yeah, it's an interesting, I guess, inflection point for fintechs right now, as we see it. On one side, you have a massive opportunity. Every product from payments to lending to wealth to insurtech to variety of financial services products that fintechs are trying to disrupt. The ceiling is very high, and we are behind on global averages, pretty much on every product out there. So I think the opportunity is massive. That's what we investors have been salivating for the last 7 8 years for this industry to grow, mature, and solve many of the problems, and of course generate great returns. But having said that, when it comes to fintechs, basically you're playing in a financial services field. You are going to run into the regulatory roadblocks along the way, and that we expected. And how they're going to shape and how those roadblocks are going to be. Are there some of them maybe insurmountable? Some maybe some can be addressed. Some we can work around. Those are happening today. As you know, over the last 6 9 months, there's been a lot of talk RBI putting some guidelines, and so there is a little bit of unstable instability today in the industry. But having said that, it's a massive opportunity. I'm sure the companies will work around any of the roadblocks that are out there. The third piece, which is kind of creating a little bit of chaos, is the global chaos that is happening with inflation and most of the central banks raising interest rates. And you've seen some banks fail out in the West. So those things don't help, right? I mean, they're much closer to home when it comes to fintech industry compared to other industries. So yeah, all those things seem chaotic at this point. I think smart entrepreneurs will maneuver through these chaotic times, and the industry, I think, is going to be a large industry with massive potential. So we are very, very optimistic, although things look chaotic.
Sure. Noted your three important points, Rajesh, and good to see you're optimistic. Sanjeev, let me come to you and understand your perspective.
Yeah, thanks for having me, Amol. It's always great to speak with you on various topics. So I'll actually agree with Rajesh. There is opportunity and there is chaos, and at the same time, whatever is transpiring globally, as well as what might have transpired in India for the last 3-4 years, owing to COVID. And I would start actually from demonetization and thereafter multiple serious transition that has actually happened. And with COVID, there is a bit of uncertainty with respect to visibility on funding and people being slow. And at the same time, in your opening remark, while there are listed fintechs, well, there are unicorn fintechs, but everybody is losing money. I think that is a very important point, Amol, that one must think about. Why are we losing money? Because inherently nothing has changed. I mean, you have been selling loans before. Using technology, you are selling loans now. You have uh, created a brilliant platform called UPI, and you are able to transfer money and payments and all those has become seamless. And with a country like India, which is the largest populated country, uh, having something like UPI has really changed the perspective completely. Okay. In insurance also, there was an insurer and there was an insured. At best, we were able to aggregate the products on one particular platform, and we were able to push the buy consumers or buy leads and push them to a call center. Uh, that's what we probably have done in insurance until now. Uh, and when it comes to operational unit economics, etc., we lost focus. The fintechs, the startups, the unicorns. Her business, every business has a fundamental premise that there has to be a revenue, there has to be a bottom line. And in the process of becoming large too soon, too fast, we actually lost the basic fundamental thing that nothing primarily changed. There's only an interface that has changed, but the buyer and the seller remains the same. So why should we lose money? So yes, opportunity is huge. There is chaos. There is regulatory uncertainty all over, in India as well as in outside. In insurance, I think the regulator is becoming very, very smart, which I guess in the last 6 months, a lot of transition has happened over there. Uh, the most important thing that needs to happen, and we can continue to blame investors and we can continue to blame external factors and we can continue to blame economic policy crisis, recession, COVID, etc. But as entrepreneurs, we have to very simply understand, with or without technology, there has to be a transaction. Every transaction has to be profitable. You will have a lead time with respect to building a business out, and that lead time is effectively your is your break-even period or time frame, but you have to be so agile in your thought process that you are already thinking 5 years ahead and are able to make every transaction profitable. Okay, and fintech is a wide term. There is insurance, there is lending, there is wealth, there
Right.
is so on and so forth. Uh, uh, we have to figure out a way to leverage the cost. We have to figure out a way to leverage the digital presence that every human being of India has. Okay,
Hmm.
if we are able to do these two, uh, profitability should not be a problem for any organization.
Sure. In fact, I wanted to discuss the profitability part well in detail. Thanks for touching that, Sanjeev. Let me go to Prasanna and understand his perspective on the what's brewing with the fintechs.
Yeah, I think good to hear from Rajesh ji and Sanjeev. I think the way we can see rise of fintechs back in since 2014-15, typically in a country like India, we have seen a lot of adoption was happen on the payment side, and typically it has moved from payments to digital lending, and there are many more other business models are coming. Like we keep hearing, insurance or wealth management is picking up, and then few more areas are now coming up on a data side, right? So the data platforms are coming up, which are helping and getting plug and play within fintechs and within the banks also from these service providers, or adoption like banking as a service. Today we could see at least 5 to 6 companies, maybe down the line 3 years you will see 20-30 companies around these business models, 20-30 fintechs. While we see this is happening at a individual houses of fintechs, we could see last 3 to 4 years, many more digital platforms are coming from
Right.
government or regulators or RBI or SEBIs and so on. UPI is one example we have seen, or Aadhaar, how it has picked up. And apart from that, account aggregator is picking up. So we could see some fintechs riding on the account aggregator wave, or some fintechs which are looking at how other new platforms are coming and how to utilize those payment platforms, or
Hmm.
the new kind of business models which banks are looking at on a remittance side, cross-border side. So I think what we were doing as a fintech company back in 2014 till 16, 17 has picked up with the UPI and Aadhaar, and the new kind of straight-through fintechs are coming up. And now platforms like Credibles, Credivenues, Decentro, Sciences are building that additional layer of a banking as a service. So in a nutshell, what is happening? Fintechs have now pressure of what is changing outside of their houses, and to
Right.
be sustainable in that way, because a new fintech will have a new infrastructure ready outside, and will have a leverage to not to rework on the existing architecture or existing people, or to create new skill set out there. But today, if you
Hmm.
talk about 2023, people talk a lot about how do we adopt generative AI, or how do we adopt automations or any of those new technologies, so-called blockchain, which typically existing fintech will have a challenge to adopt immediately, because they are not thought of, or if even if they are thought of, it's some kind of a burn which they are not thought of into their day-to-day earn burn exercises. And certainly the way we have seen global actions or global reactions, Ukraine, or some of those factors in US, it has given a lot of attraction. We may not anticipate, but the fintech owners who run this day-to-day business, they have seen in last couple of months, and last 20, since end of a 2022 and start of a 23, we could see the low of investments from investors for many more reasons. I think the way I communicate, talk with the fintechs, I must say out of 100 fintechs, 60 to 70 fintechs are looking for a fund, but they don't have that direct access the way we used to have back in 2020, 2019, which we have seen during COVID era. Too much of automation, too many things are coming. Other areas we could see out of fintech, banks, or how banks are adopting to fintechs. Now many more banks are now creating some sustainable model or a framework to adopt fintech immediately. The way I see Kotak, Yes, or RBL, and some of the banks who were doing fintech adoption, now many more new banks are coming up with this adoption. While Sanjeev has spoken very nicely, there is huge opportunity, and to reach that opportunity, we need many more fintechs in all these areas. But to reach that equation, the
Hmm.
investment and research, technology adoption, having right talent, I think fintechs today have to really re-see their journeys, what they have done today, and realign their maps on product, people, technology adoption, and what is coming in from regulator. We have seen some regulations which has really disturbed or done some kind of a disturbance. Example, regulation around BNPL could say, or regulation around how do you outsource the work from a bank to fintechs. I think eventually some of those cases we have seen some banks, fintechs also become cautious to have a right set of fintechs aligned not only with what they are offering now, but a fintech which comes with a more compliance, more this domain knowledge, it becomes very easy for handholding. So I think in a nutshell, what I could see as of now, fintechs first of all looks at very good investment and very good investor, or whatever is happening outside, how they can really have some good journey on the existing model, which may not happen last next 2 to 3 years. They have to change a lot of gears. Example, the way some of the fintechs have started as a card company, card issues company, now they are acting as a banking as service, right? They are adding many more things. Now it needs to be a good equation between their investor and their product roadmap, how they want to really align the future, but which is a game, right? So if you have to be a sustainable fintech for a longer period, you need to adopt technology, adoption of a right regulation which is coming up. So how they
Right.
are going to build tomorrow's products, provided whatever regulation comes, the product should run. So I think it's a I would say it's a phase for all those fintech founders to really relook at many more aspects, and to draft another process or another roadmap ahead to have a better sustainable journey. Yeah.
Sure, Prasanna. Thanks. I think that was quite detailed one, and we have to look at sustainability because of the technology or the different platforms. You can add anything and everything, but the core question is whether you should add everything on your platform and divert or deviate yourself from your core sustainable model that you should develop on. Rajesh, let me come back to you and pick it up from where we started. You mentioned, I think, three important points. One is obviously about the opportunity, and second is chaos. And you mentioned obviously about the regulatory bodies and the instability in global chaos. Obviously, regulatory and the global chaos we cannot control. That's not in our hand. But when we speak about the instability, investor can do a lot, right? And that's where the fintechs are looking for. So, are you ready with your checkbook today? Are you evaluating fintechs with the same speed that you had maybe 2 years back and ready to sign a check for them now?
Yeah, absolutely. I don't think anything much has changed. First of all, investors do have lot of cash that they're sitting on. They would love to put it to work, but the same investors who are doing deals in days and weeks are going to take months and years now. That's the nature of the industry. I'm not going to defend that behavior. I think evaluation of a company, of a sector, the opportunity should be should be exactly the same. Whether good times or bad times, especially if you have investments that you need to make, and we all need to make investments, and I think fintech is a good opportunity, and I always believe that investors should be should be thinking about opportunity ahead, especially venture investors and early stage investors like us, Series and Series B investors. We need to think about what's going to be the landscape 4 to 5 years from now, not worry too much about the chaos today. But having said that, I mean, we at Kalari have stayed away from lot of the sexy fintech models. For example, I tried to keep my fund away from lending for many years, right? And I truly believe that Indians are not used to unsecured lending. They're used to, either you have a great credit score and everybody wants to lend to you, all the regular banks want to lend to you, or they're used to borrowing from their neighbor or the local lender who can knock on your door or kick your door open and collect the money, right? That's how they know how to repay. And the first wave of lending companies, our thesis was that Indians are going to learn on the back of these investments that are being made into these lending companies. We're going to learn and the hard way. Investors are going to face tough challenges. A lot of companies will shut down. That was the thesis, and I'm not saying that thesis fully kind of transpired, but we have seen a lot of ups and downs in lending, for example. So what we eventually end up investing into lending, for example, is into companies with entrepreneurs who are talking about risk management, not about building a book. And I always said this to my team and any of the entrepreneurs pitching us, how large of a book they can build and how fast they can build, right? I mean, I can build a book of 1,000 crores today, standing outside my office in ITPL in Whitefield in one day. Lending is the easiest thing to do. I mean, building a book is the easiest thing. Who are you lending to? Can you collect that money? The risk management part, no entrepreneur, no digital lending entrepreneurs were talking about in the initial years. Now they're much more savvier. They've seen those collection problems and big NPAs, and now the learnings have come, right. And now I think market is little better and more mature to fund the next set of entrepreneurs who have better learnings from all the mistakes that have been done earlier. So I think it's always an evolution, and I think, like I said, the opportunity is great, and like any other business model, fintech is no different. Can you do better, faster, cheaper? But if you can do all three, you'll have a great product out there, right? But the problem is we always want to do cheaper. Cheaper is fine. For example, e-commerce, etc. We're still losing billions of dollars. I guess educating the Indian market is taking a lot longer, right? But financial services is a little different. You can't play with you're playing with somebody else's money. Money is flowing not just from my our fund to an entrepreneur, right? I mean, they are co-lending, they are borrowing outside. The money is it's a different cycle when it comes to fintechs compared to other industries. So you need to be a lot more prudent. And I agree with Sanjeev. I don't think you should get into any transaction where it's not profitable. The only thing you can argue is that yes, my profitability is not as good as NBFCs and banks, for example. My profitability is a lot lower, but I'm going to make it up on economies of scale. That's fine. That's fine argument. Instead of $1 billion, I'm going to lend $100 billion eventually, and I'm going to make it up. That's fine. But even for the economies of scale to work, every transaction you need to make money, and that's what most entrepreneurs miss out. And customer acquisition costs are really high on the digital or the fintech side, whether it is lending, insurtech, wealthtech, doesn't really matter. Massive customer expenses, customer acquisition costs, and you need to figure out. I mean, you can calculate all these LTVs, etc. But I think you need to think through those proper unit economics, and entrepreneurs who think through risk, unit economics, making money on every transaction. That language, I think they will still get funded today.
I'm sure the fintech startups watching this show must have got a great guidance from you, Rajesh. Better, faster, cheaper. A good headline for me for sure. Uh, Noted your points, Rajesh. Sanjeev, let me come back to you now. And you obviously spoke about profitability and many other facts in your opening remarks. You also said that there was somewhere the race to become large too soon, right? My question to you now is, when you speak about the profitability, how is it for insurtech companies to make profit? Because ultimately, the commission is limited. Ultimately, the ticket size is limited, and you will have to sell number of policies perhaps to even settle the cost that you're burning. And more importantly, insurance is still not a very interesting product because the penetration is very less, and it's still known as a push products. Most of the companies are also not making profit. Given this background, what, why, and how do you think the insure tech companies like you will make money, and how will you become profitable?
No, it's very good question, Amol. And just in the interest of Rajesh and Prasanna and the audience listening to this particular session, I've been a lender before as well, and I have been a non-digital lender and a digital lender, and played some role in rolling out PSB 59-minute loan earlier. So Insurance is a completely different ballgame altogether. It's such a it took me 1 year to understand the difference between a life insurance and a general insurance. Okay, and CoverFox was a very celebrated company. I mean, we are still celebrated, but it was definitely at some point in time a company which was at par, competing with Policy Bazaar, and you name a marquee investor, they were on our cap table. Uh, but the business model was largely acquiring customers, pushing the customers to the call center, and constantly trying to increase the GWP, right? And therefore, what mistake we did, and why I'm calling it a mistake, because the chaos at that point in time was to be the largest. Very soon, we should be like in zero to $150 million in 3 years' time. Any entrepreneur would want to become $1 billion valuation in another 3 years' time, right? So you became 100x in 3 years. You can become 10x in another 3 years. So what we and let me not try to demean my other fellow insurance sellers in the country, either be it a manufacturer or be it a distributor or be it another insurtech. But what we did was uh, we actually thought slightly differently. We said that, look, there is a Flipkart and an Amazon, and between both of them, almost 90% of India is like buying goods and products. Right? Similarly, there is Google Pay, which is doing transactions on a daily basis. There is Cars 24 and a Cars Trade, which is selling cars. And they're digitally selling. Spinny, for example, they sell roughly 3,500 cars a month digitally. You know, we said that why are they depending upon a distributor or an insurer to sell their insurance? Okay, why is it that the same technology which CoverFox is using, we have a platform and we are luring customers to come to us, okay, and we are luring customers to come to us and buy an insurance product, and in the process, every 1,000 rupee revenue that I'm earning, I'm actually spending 3,500 rupees, you know.
Right.
But the 1,000 rupees that I am earning, I don't have to earn 1,000 rupees. But the 3,500 that I'm spending, I also don't need to spend that 3,500, because on that 3,500, 2,000 rupees I'm spending on acquiring the customer. So what I said, that if I keep my cost 1,500 constant, and I go and place my platform either by my name or by my customer's name, and give them the same cutting edge ability to do a transaction for their consumers, then that 2,000 saving is actually quite a lot for me, right? And the 1,500 cost is leveraged across 20 platforms. So even if I get 200 rupees per transaction, I'm actually making more money than I would have made otherwise if I was selling for myself.
Okay.
So if you are right now have a Flipkart app, you go to Flipkart app, go to categories, go to insurance, you buy insurance over there. You're actually buying from me, but you are a consumer of Flipkart. So for Flipkart, there is no customer acquisition. That marketing dollars have already been spent. Okay, that money they have spent. That inventory exists. All they have to do is to ask them to buy insurance on their platform. And what I am doing is I'm giving them the seamless platform so that they can do a transaction in 90 seconds.
Right.
So if our objective is to increase penetration and let it go to the last mile,
Right.
hundreds of policy bazaars and hundreds of CoverFox cannot do.
Hmm.
But a 5 large e-commerce platform or a digital penetration, Google, for example, we are on GPay, we are on multiple platforms, so which is used by many and sundry, okay, which is used by every individual in this country today. If they know that insurance वहाँ भी मिलता है और
Right.
बड़े आसानी से मिलता है, and I can buy in 90 seconds. I can just click a photo of my car का number plate and I will be able to buy insurance. So we actually transformed into that, and thereby every transaction became profitable.
Okay.
Okay, the requirement of capital for me to do a 10,000 crore GWP has dramatically reduced by 100x.
Hmm.
So with an additional investment of $10 million, I can actually do 500,000 crore GWP. So we are now gearing and marching towards becoming India's first insurance gateway, like your payment gateway.
Right.
Our stack will, as a chip, be available in any digital platforms. On LinkedIn, our insurance is there. On Facebook, insurance is there. We'll be sitting everywhere. Consumer can buy. Now there are complicated products like life
Hmm.
insurance, where regulator has a lot role to play. Okay,
Hmm.
regulator must understand today's consumer is no more the consumer of 1960s or
Hmm.
70s or 80s or even
Hmm.
2000s, where they thought insurance was a savings product.
Hmm.
Today, consumer knows that insurance is a commodity for me.
Hmm.
I have to go and catch a flight. I might get late. Let me take a 1 rupee insurance and cover my flight fare. Okay, so consumers are so savvy today.
Right.
So regulator must understand that on complicated life health products, they have to make it. They have to change the regulation in such a manner
Hmm.
that it allows companies like us
Hmm.
to create products around such complicated products where human intervention is necessary. So we have to cut that. We have to also ask this question to ourselves, and I keep asking that to our regulator. Why
Hmm.
do you think insurance is complicated? It is
Hmm.
not. It
Hmm.
is like ordering food on Swiggy.
Right.
Why are you not thinking like that? The moment you think like that, all of us will think like that. Now, if you tell us no, you have to forcefully fill 25 forms, I will be forced to do that because मुझे धंधा करना है.
Hmm.
But if
Hmm.
you say no, these three things I will take from your Aadhaar, I will take from your PAN, and I will take from your CIBIL,
Right.
and based on that, I can score and give you a life insurance product and a term insurance product. You just make that a regulation. No, you made that in case of RBI, in case of
Right.
SEBI. So I think that transition will take 2 3 years time, but the transition with respect to people understanding that insurance should and must be available at any digital platform, that change has started to happen, and probably we are the pioneers and leaders today. Okay,
Hmm.
that's the new form of cover fox, which we are calling cover stack. But effectively, I don't want to be a brand. I want to
Sure.
be the pinnacle of insurance distribution. Period. I want to sit on every CRM.
Sure. But noted your points, Sanjeev, and I think every transaction is profitable. I think that's a very unique mantra for a new business like you. Thanks for adding that, Sanjeev. Prasanna, let me come to you. And when I look at even as a a customer or a citizen at the technologies, I think everything is there already, right? Maybe we'll think about blockchain and quantum computing in the future, but we have payment, credit, and account aggregators, and so many platforms are there, which has made our life easy. But how will this actually add real value to the fintechs as well, in terms of the profitability, in terms of the sustainable business? How do you see that specifically as a tech expert, and looking at the technology that the fintechs have used?
Yeah, wonderful question, I think, Amol, and that this question and the answer for this question will drive multiple stakeholders of a fintech ecosystem, primarily banks, who are providing APIs or open data
Hmm.
to the fintechs, and the public digital infrastructure which we are seeing, right? How they can be utilizing all these upcoming technologies, and the technologies drive the business models. If you go back in '95 and thought of a insurance, right? Can I have an insurance on the spot, right? Wherein Sanjeev comes and says that I will create this whole stack and which will offer insurance on the spot. Why? Because technology is available now, right? So the now let's look at how technology is moved, how communications have moved, how programmability has moved from
Right.
95 till until 2007 8, where smartphones came into our picture, right? So
Hmm.
all of a sudden, all of your web or e-commerce or those models has moved onto the mobile phones, right? So imagine the fintechs who were operating in the space on web applications like Bazis or some of those, automatically they are wiped out if they have not adopted this mobility kind of era, right? Similarly, today we sit on some of those foundational technologies, and in these
Hmm.
foundational technologies, last 3 4 years, lot of a new enhancement has happened. Example, blockchain, the way it was at a nascent stage back in 2016-17, not a bank or not a fintech, not a global companies like Swifts or IBMs or thought of to utilize it for any of those fintech opportunities, right? But today we can see that how NPCI is creating a blockchain-based platform for a new age of fintechs. Like they tried doing it Vajra, or we could see how CBDC is going to come in our life, which is built on some blockchain kind of ecosystems. Not today, maybe down the line, 2 3 years, when we'll have a CBDC relevant APIs, SDKs available. What we have seen in UPI, similar kind of a new kind of a fintechs or existing fintechs will adopt this kind of ecosystem, right? Now, back in if you look at the data and the way the data privacy, data governance, and data economy is really is getting new shape, it becomes important for a fintech also how they can leverage on the existing data based upon the various rules and regulation. If we come from GDPR and our India's data protection regulations, while they are sitting on a data, are they are able to use that, right? Is it anonymous data they can use, or some personal data they can use? So while we have a data, how we should use the data to have a better customer experience? How
Right.
I was doing existing banking and fintechs, how can I use leverage on data, some kind of innovation, so that I can offer something ahead of the other me too kind of a fintech, so that I can become one of those unique fintech wherein I am giving some kind of a bi-directional experience instead of just personal come and avail for insurance or avail from some wealth or avail for some kind of a fintech experience. But if I start giving some nudge notification or bi-directional support, that customer will always talk about you everywhere. That comes with the technology. That will not come with if you are on some 7-year-old technology. So the fintech need to see or keep eye on which are those top end technologies, how communications are changing from 4G to 5G, what will be the customer expecting in the next 2 to 3 years, because the same customer will go to the retail shop, the same customer will go and watch movies on metaverse or some other kind of a communication media, but are you offering your fintech services in that new channel? So fintech has an opportunity, even banks who are providing railroads to the fintechs and a regulator who are providing railroads regulation guidelines to the banks. All the three
Right.
actors have an opportunity to work closely and do some kind of innovation, do some kind of experimentation, do some kind of a hackathons, which we could see how RBI is doing on the blockchain, better CBDC, fast CBDC or interoperability on blockchain. RBI Innovation has done some exercises with a lot of fintechs, and even some banks not taking responsibility themselves are doing these kind of innovations. Now, while blockchain has some massive output, example, a fintech who was riding on Aadhaar, and for example, to open a bank account or to open an insurance, there is some cost for a bank or insurance company, the way regulations laid down. That cost will drastically reduce for the same customer across all the regulated entity if they bring on data and blockchain and AI together. Imagine 5,000 rupees will come down to 1,000 rupees, maybe less than that, if you use these foundational technologies at a public digital infrastructure, right? But it takes its own time, right? While it takes its own time, which are those fintechs will adopt, which are those fintechs or bank will push the regulator, let's adopt these newest technologies, so that down the line, when Rajesh ji spoke about 5 years or 6 years, how customer is going to change. While customer is changing, while customer is expecting change customer experience in the some other industry, and he comes to your fintech and he asks, do you have this kind of experience? If you
Right.
don't have, you will not do with that fintech, but other fintech will come and ride on the technologies and will be competitor, or it will surpass that whole. So I think existing fintechs, we could see some of those started adopting data or started adopting a new age of technologies. I think technology will heavily come, but I think in this technology space, while technology service providers are there, but how better, how nicely we should adopt, that's a collaboration between the regulator, banks, and the fintech companies, right? If every individual will start acting and utilizing over a period of time, sometime we will get some guideline. So better that these three entities work together, have some regulatory guidelines together. Otherwise, we keep hearing new guideline on how on a cloud, or some new guideline on how to utilize the data. So I think collaboration will play a major role while technology is there, because tomorrow's experience will be on marketplace. How do you create trust there? How do you take care of data? So I think that's how I look at Amol. While today every fintech is using point-to-point service, but they need to see how they will be part of some partnerships. So while they have their own journeys, they should look at brand building, which is already happening. They should look at strong partnership with the other fintechs, strong partnership with the banks, and always they need to take care of talents and many more other, which is aesthetic of any of those fintechs. That's how, and that becomes that makes the job of an investor very easy. This is not a me too. This is something unique and which will really prevail for a longer period. Yeah.
Sure, sure, Prasanna. So I have a couple of questions from the audience as well. And this is, I think, a very important question. Rajesh, I would like you to take it, if you don't mind. Let me read it out for you. Uh, the question is, according to the panelists, opportunities in the fintech sectors are massive. I mean, we are partly discussing about fintech sector is growing rapidly. So this question, the next part is then, why are investors not investing as much as before? And why are top fintechs recording big losses? You want to take that, Rajesh?
Yeah, I'll try and take that, and see uh, not trying to defend investors here, but it's a combination of investors and entrepreneurs, right? There's always a herd mentality. If a space is hot, meaning one or two companies in a given niche segment get invested, or large amounts go into those companies,
Hmm.
then there is a series of investments, and always this fear of missing out, FOMO, happens with investors all the time. I mean, this is not the first cycle I'm seeing. I mean, I would have seen half a dozen cycles like this in the last 20 years I've been doing this,
Hmm.
right? So, unfortunately, we are in one of those down cycles. So, nothing to do with the opportunity set changing. It's nothing to do with entrepreneurs not finding the right entrepreneurs or the right business models. I think fintech has matured quite a bit over the last 8 years. Like I said, we have learned from many of the mistakes that have been made. Like Sanjeev said, people are figuring out how you make money on each and every transaction. Do you need to go after customers and spend a lot of money, or do you do B2B2C models or B2B models? There are many ways to truly get to proper monetization, right? And those companies will get funded, and the cycles, I can't explain the cycles. I like to think I'm not one of those investors who follows the cycles, but we are in a down cycle. So investors are going to be more wary. They're going to ask you a lot more questions. They will question the same business model that they funded last year. So these things don't make sense to most entrepreneurs. Unfortunately, that's how this has worked for many years, and I don't see this getting any better or changing. Right? So you have to wait it out. You have to sweat it out when these down cycles come.
Mhm.
The same investors who are gung ho about the same business model last year, nothing has changed. If anything, I think things are better now, but they will hold back, right? So I can't truly defend the behavior here, but that's what is happening. You're on down cycle. There's not much one can do. And Amol, the second part of the
Hmm.
question, I didn't catch it. Uh,
Second part of the question is, why are even large fintechs making huge losses
Like I said, you need to, whether it is e-commerce, whether it is
today?
fintech, doesn't really matter, right? So at the end of the day, you're providing a product or service to a customer. So if the customer truly understands the value proposition of what you're doing, what you're providing, they need to pay that incremental money that it costs to provide that extra incremental value that you're providing.
Hmm.
For example, e-commerce is a great service in a country like India, a great service, right? There is no store in India that can stock millions of products. There is no way you can, even if there is a store like a Walmart that you have in the US in India, and you can go and pick up most of your basket, you can fill your basket. There's no parking. The driving conditions are very poor. There are so many issues in retail, offline retail in India. You would think after 10 years of losses, customers will understand the value proposition of doorstep delivery of millions of SKUs at their fingertips, right? They're still not getting it. They're still not willing to pay. Unfortunately, yeah, there's a lot of macroeconomic reasons for this, and I can spend, like, an hour on macroeconomics why this is so. I think India has to get from about $2,500 per capita GDP to about $5,000. It happened in China. I think
Right.
people, when you have extra money in your pocket, you will see the value. The people sitting here, we see the value, right? If Flipkart and Amazon are charging us 100 rupees extra delivery charge, we'll pay for it. Swiggy and whatever the delivery service, maybe we see the value in that we're willing to pay. Most people shop at those places for discounts rather than appreciating the value that those products and services are giving them, right? So I think it'll take a few more years and for India to get a little bit wealthy and go from that about 25-50 million customers who appreciate that today. We need to become a 200 million, 300 million customer base that appreciates the service. And I think all these companies will do well, but will they survive in the meantime? I think
Right.
most of these companies, that's the right question, right? Most of the companies have been losing money, hundreds of millions and billions for nearly 10 years, some of those unicorns, right? So will they survive the next 5-10 years until India can afford their service or appreciate the service? We'll see.
Hmm. Sure, Rajesh. I think quite meaningful one. But on a lighter note, tell me something very important. Do you feel that every fintech is maybe copying each other because they must be coming up with data analytics, AI, all these words in the pitches, and perhaps we'll be finding the same pitches that all the fintechs are making? Do you get bored, or you're happy with dozens of filter cups of filter coffee? I know the filter coffee in Bangalore is really good.
No, yeah. I think most entrepreneurs are now switched to Starbucks, and I don't think most of them are meeting at a filter coffee place. A
Okay.
third wave coffee or Starbucks is what I see is the is more of a meeting place these days in Bangalore. But I think every entrepreneur uh, thinks he or she can do it better, right? That's the whole thing. I mean, I don't think, like Sanjeev said, the financial services business has been around for like hundreds of years, not even decades. The same
Right.
thing we're trying to reinvent the wheel here, right? We're trying to do it better, and every entrepreneur thinks that he or she can do it better than the previous entrepreneur, the previous fintech company, and that's an evolution. At the end of the day, I think entrepreneurs make businesses, not these business models. I don't see amazingly great tech or amazingly great business models that really shock me and positively surprises me these days.
Hmm.
I see better and better entrepreneurs. I'm looking for those
Right.
those people, right? There's no great creative business model that I said, let's fund this. But we have said, yeah, this is a great entrepreneur. Let's fund this person, right? So I think that's what we're looking for. I mean, yeah, pitches. I
No,
mean,
sure.
the same.
No, sure. I buy your point. I think everyone is looking for those good and the great people for sure. And the valuation and the whole number of fintechs is quite appreciated globally. Also, I mean, I was just going through some reports, and it said that just 108 fintechs or 108 startups, in India, the unicorn startups created a value of 350 billion. And by 2025, going ahead, we will have more than 250 unicorns, if that's what the speed that we are going to have if we don't have funding winter, at a longer time. uh, Sanjeev, let me come back to you. And when we are saying that $250 billion, 250 unicorn fintechs or unicorn startups we will have by 2025, and the current funding winter, how do you connect these dots? Do you see a tough time for fintechs specifically going ahead? Because on one side we see a greater opportunities for the wealth tech, even payment, because cross-border payment is shaping up, and insurtech businesses. But the demand and the margins, the profitability, and typical NIM, as we say in a banking, is very fractional. So will it be a really sustainable?
So I think I have a different thought on that, and my thought is that personally I don't know, and many people might say that you are not an unicorn. That's why you are saying it. It's just a number, and it is a function of even the exchange rate. So an exchange rate has nothing to do with the business that you are building, right? Suddenly the exchange rate will come to 40 rupees per dollar. You are a unicorn at even 4,000 crores value, right? And probably the number would be much more than what you have today in terms of number of unicorns. I think what is important with respect to connecting the dots is concerned, and I do come from a very old school of thought, is that uh, you have to first of all understand that there is no money available. पैसा नहीं है. There's no money available. Okay, money is just a function, is a resource which is important for you to move from point A to point B. But it is just a resource. It is not the resource. Okay, so as entrepreneurs, we have to first of all make the foundation, the fundamentals of the business strong. So what are those fundamentals? Every transaction has to be profitable. Number two, we as entrepreneurs are really not thinking, or must not think of a 3-year, 4-year, 5-year horizon. My father started a business and he ran for 30 years. After 30 years, he said, कि अब मैं कुछ सीख गया हूँ, ठीक है? And if I talk to entrepreneurs who had started business in late 2000 and early to 2010s, I used to be a VC and an investor at that point in time. Those entrepreneurs are still there and they're still running the company. They're 20 years in the business, right? Now they are saying that, "Ab, I understand what I'm doing." Okay, so that's the second fundamental thing. As entrepreneurs, we have to believe that we are here for a long term. Okay, so there is no business has to be built dependent upon internal sources of funding. Internal sources of funding are your internal investors, internal shareholders, internal stakeholders, and your business dynamics. Number two, it is a long term play. You will see cycles, ups and downs. Okay, when I used to be a lender, I saw twice down cycle and twice up cycle. And microfinance, I've been into microfinance, and microfinance has seen valuations like going forward multiples of 20x. Today I made 10 crore profit, so you should value me 200 crore more tomorrow, right? So those were the mentality. So
Right.
dependency on external capital mindset has to be stopped. First, जो है उसी में can you figure out, build your foundation, build your fundamentals. Money will come. Money will come. And you don't
Sure.
need to raise 500 crores to first worry about 6 months, 12 months. Things will happen, fall in place. But
Right.
have these foundations right. So whether in 2025 we will have 250 unicorns, again function of lot of things including exchange rate. So if our economy does well and you do 40 rupees per dollar, you'll probably have 900 unicorns. Okay. so 250 is not even a number. Unicorn is not a status. Foundation and investors will come attracted towards you only when you have these basic fundamentals, right? They have made mistakes. Let's take it between 2019 to 2022, they made massive mistakes. There was no need to pour so much of money and value their own money next round. Okay. It was a crime towards the entrepreneurs.
Sure.
Okay, let me put it this way: it's a crime to, and then now you're blaming the entrepreneurs कि तुमने value बढ़ा दिया. Why you valued me? Now you are devaluing me. So you figure out what you want. Sorry, Rajesh, but that's not. I'm being totally honest over here.
I totally agree with you. That's exactly what I would have said.
Quite meaningful points there. So let me shift to my a very last part of the conversation. I have a couple of questions, but I think many of them we have already answered. So let me shoot one last question to all of you, and this which I've been discussing is what next now. Prasanna, I will start with you. What next for fintechs going ahead? How do you see the future hereafter? Because 2 years back the commentary was very different. 6 months back the commentary was very different, and today also the commentary is very different, right? So what is your commentary? How do you see the future of fintechs?
I think what we have seen, the future of fintechs or tech companies back in 90s, right? So that was another name for companies who are providing financial services, who has become Infosys and many more other product companies. As the number was less, they prevailed that whole existence for longer period, right? So here onwards, fintechs will have an opportunity to become a very good and a big company if they are giving sustainable experience to the same banks, right? Where these Infosys or Nucleus are providing the lending or core banking solutions. Now, I think fintechs will always come up with some kind of age experience on banking as a service or payments, lending, insurance, and so on. here onwards we will see the kind of companies, and our other speakers will also agree. As a India, we have number of fintechs, right? Quantity of fintechs is huge, but if you look at the quality of fintechs, or out of 100, how many are really successful and profitable, considering how much they earn, burn, or how much investment they are raising, here onwards you will see a good traction of a good quality fintechs. That's what I could see. The entrepreneurs are becoming more and more smarter. Their understanding is not only fintech or a wow customer experience. There are many other elements which needs to be taken care, not only around investments but only around the compliance regulation part, which is also very important for a sustainable fintech ecosystem, because now you will see many more guidelines will come from RBI in case of a banking ecosystem. Now also there's some guidelines that they have given that banks needs to revisit every fintech which they have collaborated, right, post some of those things. So I think at the same time fintechs will also reflect on forward purpose. They are getting revisit or these things. So I think they will always look at what is a new regulation, what are new these guidelines, compliance. So in a nutshell, I think fintechs will become more smarter, and they will look at what we should not be a me too kind of a fintech, but we need to really provide a new kind of a fintech experience. Now while we have done this kind of a economy on lending, insurance and so on, and the way our banking ecosystem will ride on the next orbit, which could be have a data platforms, which will be have a banking as a service platform, tokenization platform, which is not at all there in India. So we will see what is there in the West, what is there in some other countries, and what kind of a new things are coming. And these new business models will be adopted by existing fintechs, or new fintechs will rise with a new kind of a business models. What we have seen today, there are 6 7 business models, but down the line next few years you will see additional few more models around digital assets, tokenization, ESG, clean tech, so green finance, impact finance. These kind of a fintechs will have a larger view. What we are seeing today's fintechs, that will become a traditional fintech, but these new things will become a value unicorns or some of those profitable models. Yeah.
Rajesh, what do you think? What's next for fintechs? Will they chase value, or they will just look at the sustainable business model, or they'll just keep quiet and run the business? What do you think they will do?
Entrepreneurs and investors will always chase valuations. That's not going to change, right? And I think a mature ecosystem should focus on value creation rather than valuation. And fintech can be a very confusing terminology to use. I think entrepreneurs need to know the difference between a technology company playing in financial services versus a financial services company which is tech enabling itself, right? So in India we tend to confuse by intermingling those two. But the reason it's different, and I think a word of caution to entrepreneurs: if you want to be a fintech company and you want to be a lender, for example, no, you're a lender. You're trying to use technology to do better than what NBFCs and banks are doing. That's how you need to think about it. So your core skill has to be lending. Your core skill is not technology, by the way. So you better know. You better be the best lender. You better be the best risk manager out there. So that's what entrepreneurs need to understand. If you're a technologist, there are variety of things that you can do around financial services, building great technology, because financial services, along with for example, healthcare, education, a lot of these industries need massive amount of digitalization, massive amounts of technology enablement, optimization, workflow automation. There's so much work that needs to be done, right? So I think you need to figure out what you want to be, and what Sanjeev said is very important. How we transform this company, right? Yeah, he realized that I rather build a tech stack for insurance and let other people sell the thing. I don't want to be in the brokerage business of selling to every Indian who is not paying me enough, and it's costing me too much to acquire them, right? So you can create those insurance stacks. You can enable insurance companies. You can enable Flipkarts. You can enable the entire ecosystem if you want to be the technology player in a particular industry, right? So I think a
Sure.
lot of entrepreneurs are looking at those things. You can create lending stacks. You can payment stacks, insurance stacks. You can create all those things, but you need to be clear who you are. Are you the core product, or are you a technologist? And then and use your skill set and be good at it. And if you're a technologist trying to be a lender, it's going to take you 5-10 years to learn the industry, and you'll make so many mistakes, and either you'll shut shop or you'll burn a lot of investor money, right? So I think that will be the only piece of advice. And what next would be thinking about maturity is a sign where people understand who they are, what they're good at, and where they should focus.
Sanjeev?
No, I think well covered, Rajesh and Prasanna both. I think four things will happen very clearly, and I'm just laying them down. Number one, there will be a lot of startups and early stage companies, they will shut down because they may not have reinvented themselves. They are still living in that aura of mode. The money is available and it will come, so therefore they will shut down. Number two, there will be down rounds. Good companies, good entrepreneurs, good investors, good business. There will be down rounds for sure. Third, there will be M&A opportunities. In those M&A opportunities, people who are in the first category, who are still living in a dream that money will come, they will not be acquired.
Right.
Fundamentally, good businesses will actually marry each other. These three things will happen. And I think the fourth thing, which is very due to happen, is all the three regulator, RBI, SEBI, as well as IRDA, will start recognizing technology as a separate subset of the business itself. And while my cover fox is regulated, cover stack is not, but cover stack has to be regulated in a different way. Because we are, in a way, enabling selling insurance. Similarly, the technology companies, which Rajesh was referring to, either building lending stack or they're building insure stack or whatever stack they're building, that's a category of company which has to be recognized by the regulator, and a separate set of regulations will actually be coming. They did it for payments bank, they did it for small finance bank, they will do it for the technology company. It's inevitable. So in my view, these four things will happen. A lot of startups will shut down, with all due respect, and I'm also a startup. Okay, a good value startups will find investors will find a way to back them, but a down round. Okay, and third, there will be M&As with good mindset people, and fourth, regulator will actually start recognizing. There is mayhem right now with the regulator and the operators. That will actually stop, and they will recognize it, and there will be good regulation coming in. So primarily because it's a large market. We are the largest populated country in the world. We have beaten China. So the consumption is quite high. Our economy is very less leveraged compared to even China and US.
Right.
And external factors or external exigencies, even 10 banks in US goes bankrupt, it will have minimalistic impact on India, and we are very, very robust economy that way. But we do have a lot of private capital from the VCs. Is still not Indian capital. Okay, so there is a lot of influence that their ICs are also making, and that's why this funding winter is also there. But yeah, these are completely personal views, not cover story views.
So,
Yes.
quite interesting, Sanjeev. I think even Rajesh and Prasanna added very interesting points here, quite remarkable one. And I think whatever three of you have said, and the way if fintechs look at the sustainable business model, I think the first thing that will happen is startups and the fintechs, who upgrade their vehicles or upgrade to a new car when they raise the funds, I think will come down. They will stay with the same car. And that would be a different change that we would like to see. They should upgrade the companies and not their cars and the houses, right? So, valuable thoughts here, Rajesh, Prasanna, Sanjeev, and thank you so much for joining us on the ETBFSI platform and sharing your thoughts here. And thank you, ladies and gentlemen, for tuning into this particular session. Stay tuned. We will have a couple of more episodes specifically on the what's next for fintechs in this FinNext session, and we'll have a large event coming up very soon in Bangalore in June on what's next in fintechs. So thank you once again, Rajesh, Sanjeev, Prasanna, for
Thank you.
joining.
Thank you. Take care.
Thank you.
Thank you so much.